Let's move on with the final 5 outrageous predictions. Again, let me stress, these are not Saxo's official views, but 10 events that on its own can make a difference in terms of how we interpret the financial landscape. The first of the last 5 would be dollar yen going to 60. Right now the marketplace thinks the dollar yen is finally going to break 100, and we've seen a major change, a paradigm shift in how we look at yen. But don't forget, 110% of the reason why the yen today is strong is deflation. The fact that if you have a 2% inflation in Europe and a minus 2% in Japan, after 1 year, of course, you will have an increasing purchasing power by the Japanese of 4% and a similar loss in Europe, meaning that the currency will need to strengthen. So the whole concept about Japan is about whether they can create inflation in 2013. We think they will fail once again. They failed for 3 decades. Why not this time as well? Number 2 is that we see Spain moving into another crisis, getting one step closer to a junk status and moving beyond and losing some credibility in terms of their ability to navigate this crisis. What concerns me the most about all of the calls we have for next year is that the social fabric, the societies, while they're seeing high stock market valuations, is also seeing record high unemployment rates. That is a gap that needs to be bridged either through, of course, much better employment through growth, or alternatively through the markets coming down. I hope we see more jobs, because a society without job growth, a society where people are 50% unemployed as the youth is in Spain, is a society we cannot live with, neither morally or practically. So I hope we are wrong in there, but we see Spanish rate exceeding the 10% despite the OTM, despite the ECB. Another one you're not going to like is the fact that we are calling for the peg in Switzerland to break and seeing 95 in the euro Swiss. Over the last year, the foreign exchange reserve in Switzerland is now more than 100% of GDP, making the Swiss National Bank one of the biggest currency players and hedge funds in the world in terms of assets under management. It will be very difficult for Switzerland to navigate the balance between being an investment fund and being taking care of the domestic economy. On top of this, of course, if we are right about Spain and Greece exits in next year or more turmoil, that could be capital flight that will seek a safe haven in Switzerland. It seems like despite negative interest rates in Switzerland, they have not been able to move the Swiss franc weaker at the end of this year. So why should it change if things again accelerate in terms of crisis in Europe? We already told you about 1,200 in gold, and one of the other reasons why gold could go to 1,200 is the fact, and one of the other calls is that we think 30-year US yields could double next year. Imagine an environment where the Federal Reserve, which over the last week have indicated they have moved to a mechanical monetary policy. They decided that 2 numbers, 6.5% unemployment and 2.5% inflation, is what they need to target. But imagine the US gets off to a good start, unemployment drops all of a sudden all the way down to 6.7, 6.8. What does the market need to do? Of course, they need to say, hang on a minute, it's not going to be 2015 when the interest rates are going to go up. It will already be in the middle or end of 2013. The market will start to react. People are invested into bonds, especially corporate bonds, and we will see a massive capital flight out of it. And don't forget, for every single $1 of fixed income, for every $1 of fixed income, you need to buy free equities. In other words, there are 3 times more money in fixed income than there are in equities. So we could also see, if interest rates start to go up, we could see massive reallocation out of fixed income into equities. Finally, the most political controversial one, I may not seem it as I say to you, but we think that China will unpeg against the US dollar. Basically, it's telling the US, we don't want to be dependent on your monetary policy, but also a statement that China feels they are today a global power, a global financial power that have its own rights to its own currency zone, its own ability to conduct monetary policy independent of the big brother in the US. That could also be the starting point for negotiating an ASEAN country similar to the euro, or for China to force some of the other countries in Asia to increasingly use the Chinese currency as a currency in export-import. We think these are one of the more likely to happen next year, because we think China is trying to position itself for the next 10 to 20 years, and in this case we think abandoning the link to US monetary policy will be part of it. Let me end by wishing you all a great and happy holidays. 2012 started pretty bad in terms of expectations, turned out to be a great year for investors. Unfortunate, as I said a few times, very bad for a number of people being in the unemployment queues. As we enter 2013, we've never been more positive since I've been in this marketplace. There's not a single analyst who sees the S&P down next year, and the average expected return on the equities in Europe is in excess of 20%. Maybe the bar has been too high this year for next year, and maybe it was too low for last year. But in all circumstances, I wish you all the best and a safe travels and happy holidays, and may the presents be big for you. Thank you.